Geopolitics has been part and parcel of your business as an index compiler as you cast your net around the world. Just run me through how you approach it in the Middle East.
So again, we don't actually pay attention directly to the politics going on in these countries, but we do look at how open these markets are to foreign investors, and that's really what drives the decision of our index governance committees that look at these factors. How easy is it for investors to have access? How are the custody systems? Can they move money in and out of the markets fairly easily? Politics plays a role in investor decisions, but not necessarily in the fact of whether the markets are more open or not.
So for you, it's not really a consideration, neither in the Middle East nor anywhere else in the world. You look at the openness of markets more than anything else?
Yes. Now, again, they do go hand in hand, because if politics shut down markets, that's a risk for global investors. But again, it's really driven by the openness of the markets from our standpoint.
So when you look at the Middle East, where do you see the most growth potential, from the base that you're working from at the moment? I mean, in terms of the value that's being tracked by some of your indexes, and then in terms of what that could grow to and expand towards.
So we've always had a perspective of building indices for the local market. That's always been our philosophy. We think that it's important to help drive and grow the local capital markets, not just the global capital markets. So recently we've launched indices for the marketplace to bring new index concepts to the local investors, to allow them to keep some of their money here at home, help drive the liquidity in the local markets, because we think that's important to attract foreign global flows also.
Could you quantify that a little bit for us in terms of the numbers that you're currently handling and where that could grow to in the future?
That's hard to tell, because a lot of times as an index provider, we don't see all the dollars invested, right? We don't know how people are benchmarking to our indices. You can certainly make estimates, but needless to say, as these markets open up, like Saudi opening up, Saudi's a big market, it's one of the last big markets. That will bring more investor flows into Saudi, but also I think more importantly into pan-regional indices, because Saudi is such an important part of the region.
So after Saudi Arabia, what comes next in terms of opening up of capital markets, and obviously with that come opportunities for you as an index compiler?
Yeah, again, we operate in all these markets. So again, whether the classification is that they're an emerging market or standalone, as the case of Saudi, that in and of itself doesn't change our business approach to the marketplace. But again, as I think local investors become more sophisticated, there'll be more demand for indices and index-based products. We'd love to see, for example, an ETF marketplace develop here that's more robust. It's still early days. We think that's only going to be a positive for capital formation, which becomes important. After all, local companies should be listed here. They shouldn't be just looking offshore for their capital raising.
What's one issue that you're struggling with when you sit down with some of the regulators here? Where is there room for improvement, be it in Saudi Arabia or in the United Arab Emirates, for example?
The regulators really haven't been an issue. Really, again, it's, I think, the exchanges. We've worked with them in terms of understanding what their policies are, their openness. I think they've been very, very cooperative, and it's important for them to provide the information that's necessary to have firms like ours be able to upgrade them and feel comfortable.
In terms of industry trends at the moment, there's no doubt that index providers are becoming more and more powerful. And with more power comes more responsibility. Is there a door open for additional consolidation? Is that something that you see happening?
I think what's happening, as we've become more regulated, we're now regulated in Europe, we're regulated in other markets. I think the cost of regulation becomes a cost of doing business. Of course, you don't want that to be stifling competition. We think competition is healthy. But sometimes there's unintended consequences of regulation, and you may see smaller index providers not be able to meet the costs of global regulation. Again, that's something I think regulators should take into account when they impose some of these regulations.
Do you see yourself being involved in any acquisitions then?
Well, of course, we are the result of that when we took over the Dow Jones Index business now about 6 years ago. So again, we're always on the lookout. I mean, our strategy has really been tied to working with exchanges. So by partnering with exchanges, effectively we take over their index business. It's a commercial transaction versus an acquisition. But that allows us to help grow the business from that perspective.